What's going on, YouTube? In this video, we're going to be discussing what causes your credit score to drop. We also release content on TikTok, Instagram, and if you're also interested in shorter videos, we'll also be releasing shortly here on YouTube Shorts. So make sure you subscribe, like, leave a comment, and stay updated on the latest videos that we have, and we could possibly help you improve your credit. One of the main things that causes your credit to drop are inquiries. So let's say one day you decide you want to go buy a car or you want to go car shopping. You go to a dealership, you see a car you like, hey, we could run it for you. You say, sure, go ahead. Now, when they run that, they actually do an inquiry on your credit report. What dealerships tend to do is usually they send credit applications to most of the banks that you usually work with and get approved by other members or customers. So when they do that, that's not only one inquiry because of one car, they're usually doing about 5 to 6 different ones to see who's gonna approve you for whatever rate they're gonna approve you with. And if you have bad credit, they'll send it out to even more people to see who will approve you, which will make that even worse. So let's say you're doing car shopping without knowledge of this, and every time you go to the dealership and you see a car you like, you decide to run your credit report at every different dealership. That's like 6 reports every time you go to a different dealership. So that's like up to 12 plus inquiries, easy, depending on how many places you go and depending on how many times you run your credit. And let's say you're car shopping for about 3 months and you're going to different dealerships, having your credit run every time. Imagine how many inquiries you'll have on your account just by trying to buy a car. And at that point, when you're ready to buy the car that you want, your credit score is going to be so low that you're not even going to be eligible for the car. Or you do get approved and you're going to be paying a crazy amount in interest. To avoid this, the main thing you can do is know what car you want. Number 2, find a credit union. A credit union that's going to accept you, because some credit unions have stipulations on how you can become a member. But if you find a credit union that fits your parameters and somewhere around you, they usually have lower rates than major banks. So let's say you find the vehicle you want. You're going to want to take that bill of sale to the credit union where you have your account at and ask them for a loan. And if you come in there having a good credit score in the first place without going to dealerships, you'll more than likely get approved at their best rate. That means you're not going to be paying crazy amounts in interest. You're going to be at the lowest rate with low interest, and you'll be saving a lot of money just by having good credit and going to one place. One inquiry compared to 5 to 20 is way better on your credit report, because those 20 inquiries are going to sit there for at least 2 years versus one inquiry on a credit that's on your account and is building it. I think that's better. All those inquiries that you had from trying to buy that car stay on your credit report for 2 years, and it will negatively impact your credit for at least a year. So make sure at any point you try to avoid running your credit. No matter what you're doing. A lot of places when you run credit cards, if you do layaways, any of that stuff, they ask you to run your credit. Now you want to be very careful when someone asks you to run your credit, because you can do a hard or soft pull. Now soft pull doesn't affect it too much. It's just like, hey, we're going to see what your credit is like. And a hard pull is where they pull your whole credit report. And that's the one that you want to avoid. Another thing you can do to help avoid dropping your credit score is making sure you make payments on time. Guys, I can't stress how important this is for obtaining a high credit score. Now, a lot of places you have like a grace period as to when you can make a late payment. But if it reports on your credit that you are late on a payment, that's gonna negatively impact it. And if you make a late payment and it shows up on your report, unfortunately it's gonna drop every time. To avoid issues like this, make sure you're not spending more than you make. For example, use this credit card like a debit card. So what I mean by that is whatever you get paid, this is just an example. Let's say you get paid $500. You want to only use $500 on that credit card because that's money you actually have. So when you use that $500, you pay it off with $500 that you have in your debit card. You're basically securing your own credit card by having money just to make sure you're able to pay it off. And by doing that, you're not going to be scared of making sure that you have to make payments on your credit card or anything. You already have that money so that you can just pay the card when it's needed to be paid, and you won't have any late payments. Another important thing is make sure you have an updated calendar. Write out when your things are due. I didn't do this before, but then when I started doing it, it helped me a lot because it made me stay on top of my payments, make sure I was never late, make sure that all my finances were in order. So make sure you write out your finances and put billing dates on the calendar to make sure that you're on time with every payment. So these are just some ways of how your credit score drops. If you're interested in more videos about your credit, please make sure to like, comment, and subscribe. Tap in at mjmcredit.com for a free consultation. Just go to the link below, type in your information, and then we'll give you a call based on what your availability is. So thank you guys for tuning into this video. Like I said, make sure to like, comment, subscribe, and stay tuned for our next video.